Okay, welcome to the Polaris Trading Group's PTG University Educational Workshop Series. And in this short video, we'll review the anatomy of a bear stacker trend shift. And this was from a trade that occurred on Friday, October 17th, 2014. Now, before we get to the charts, need to just review quickly the disclaimers regarding CFTC Rule 441 regarding hypothetical or simulated performance results have certain limitations, unlike an actual performance record. Also, trading in securities and options on securities and futures may not be suitable for everyone and involves risk of losing part of all of your money. And the commentaries here are educational in nature and are designed to contribute to the general understanding of financial futures and technical analysis. Past performance is not indicative of future results. So that being said, let's get to the charts and we'll take a look at the anatomy of the bear stacker trend shift. Okay, so on the charts that you see coming up here, you'll see on the left hand side, you'll see an ES December E-mini future, a 45-minute chart, and that displays our target master stat X zones, breakout levels and breakdown levels for each session. Now these levels are calculated the evening before and displayed for those that have our software by 6 p.m. The evening before the next day. So everybody is well prepared in advance, knowing what potential breakdown levels are for the coming session. And on the right hand side is our 750 tick execution chart, which we'll focus on here regarding the bear stacker trend shift. And you'll notice here on the 45-minute chart, and where we'll focus on here today in our analysis is up here at the breakout target at the 1888 level. And one thing to immediately note is that price did reach that level during the session, and it overshot that level. You can see the long tail here. Okay, but the key here is that on a 45-minute basis, price did not close above that 1888. So you can see price got rejected, and was not able to close above that 1888. Now, for those that have multiple monitors, you can certainly have the target master stat X zone like this on another window perhaps, or a monitor viewing on the side. Right. Another way of displaying this is you can actually bring these levels right onto your execution chart. Okay, so in order to do that, and what we'll do is I'll show you how to do that right here, is that you go into studies, and again I have it already listed, PTG target master, and currently it's hidden. And so what I'll do is I'll unhide it by clicking that hide button there and click OK. And what you'll see here is that the target master level there, the breakout level, is now displayed right on the 750 tick chart. So that can help give us some reference, all right, after we've viewed the 45-minute chart. We can actually eliminate that and we can hide it, and we can actually go right into the 750 tick chart. So what we want to do here is just kind of walk through this as it unfolded on that day, and I'll highlight some of the important features to be on the lookout for in terms of trend shift. Okay, now I don't have the fair value shaded zone on here, nor do I have the lead line. I chose to just hide those for the time being and just show you the ATR structure line. All right, so this is this white line here as we're ratcheting up. That is the ATR 750 bear line, ATR line, average true range. And this is a structure line for us. Okay, so trend is up. Okay, we can see here our trender bars are green, all right, on the paint bars. So we know that the main primary trend is up, and we also have a trailing structure line. So the idea here, as trend is moving higher, we're looking for pullbacks, discounts. So we see there's actually a number of discounts throughout the course of this up move. All right, we have a what we call a turbo discount, okay, which is a faster line, okay, and which is shaded in cyan. And these stars here, by the way, represent 200 extremes, so there's really momentum high pushes, right, in this uptrend. So the up move is very aggressive. And again, we're looking for pullbacks within the context of an uptrend. All right, so looking for discounts in order to get on board, right, at a relatively reasonable price. Now, pullbacks here to around the structure line. You'll see here we have dual CCI crossover signals here. So we have the smaller cyan arrow, which represents the turbo, and then we have the white thicker arrows, which represent the normal discount on a 750 tick basis. So in this zone here, you can see very clearly that we have some discount opportunities. And of course, the result of that was prices moving smartly higher. And again, another 200 extreme reading. Again, more momentum, all right, peaks. Okay, so the buyers were very, very aggressive here. Again, once again, a small series of turbo discounts. Okay, and then what we want to notice here is this price now has reached the main target for the day. And again, this target level here was displayed in advance the evening before. So not knowing whether or not price would reach that, but once price began in a developing trend early and it was strong, and we identified that it was strong, we could say answer the question, well, what are the upper targets of which price has potential to reach? And so by simply going over to the Target Master Stat X Zone chart, we can answer that question. And again, so now by overlaying it on the 750 tick chart, right, we don't have to keep looking at the larger 45-minute chart for that information. We can just display it on here directly. Okay, so the focus of today's video, all right, is to identify a trend shift. So the components here is we have a bull stacker formation in an uptrend following by the ATR bull line here. And then as we reach this zone, now many times, you can see how price stopped right at that 1888, but there was an overshoot. And many times, the last, push, right, is usually the last gasp, right, for any type of a move. All right, so what we want to focus on here is once price is up into that region, let me just zoom in here a little bit, we want to be looking for evidence of the buyers being exhausted and looking for simply a trend shift to the downside, of which that will give us some information of what side that we want to be trading. Now, on the way up, we wanted to be taking discounts. Now, once we reach a target zone, we want to be very, very cautious, okay, to taking, further trades, in direction. Now, what I'm simply meaning by that is, as price pushed down here on a retracement, we did get another series of discounts, a turbo discount and a normal discount, all right, right in this area. Now, that is a valid trade setup. And normally we would say, we would want to be taking that trade, all right. So again, using right side pivot rule, all right, as prices started moving back up and pivoted, okay, we'd want to be, entering the trade somewhere along, this line right here where those diamonds are, okay. And that would be a valid trade setup and, perfectly, executable that way. All right, now just because we're at a target breakout, what this simply means is that we should be a little bit more cautious in terms of taking any new trade signals, in this case on the long side. Now we could reverse this on the short side if we're down at a breakdown target, all right, at the low end of a range. But simply we don't know whether or not this trade is going to work. So being disciplined, all right, by taking, all the various trade setups. Now, we do realize that losses do occur And again, if we take the trade setups as required and using the proper filters, okay, we can determine and how far we are to a potential target level. All right, so simply what I'm saying here is down here at the left-hand side, price was still in an uptrend. We had room to reach upper targets. At this stage here, we already are at upper targets. Price is already at the target zone. So this becomes a more tentative potential for failure. Okay. Now again, we don't know at this stage, right at this point, whether or not this trade is going to fail and break down or continue higher. Okay, so we just simply have to take each individual trade opportunity and manage it accordingly. Now in this particular case though, what we want to focus on is the fact that price did in fact break the structure line. So the first evidence of a trend shift is going to be the break of the first ATR line, which is based off the 750 tick. All right, price is going to trade down through, okay, and effectuate a shift, all right, an ATR shift, and that comes right here. So you'll see the ATR line, and this is what's referred to as our point break. And so once price goes through a point break, many times you'll see some 200 extremes, and in this case you saw a nice 200 extreme reading there. So what this tells us is that there's enough energy now. All right, selling has come in greater abundancy and aggressiveness, all right, to effectively break the uptrend line that's been in effect in the early part of the morning. Okay, so at this point, all right, now can we predict that's going to happen? Well, perhaps, but the point is we're not looking to try to predict, rather than identify the risk-reward opportunities and where the risk lies, whether the long side or the short side. And then let the price tell us what it wants to do. Okay, let the market tell us. So in this case, the market told us that it was exhausted. And again, knowing that we're already at a breakout target, all right, we would be at least tentative on the buy side and potentially looking for a shift. So what you see here is the shift, all right, and then price push down. And then what we normally would be expecting, and it happened very nicely here on this trade day, was a retracement bounce. All right, following the point break. All right, so the point break was at the 1888, so we would be anticipating some sort of a bounce. We don't know the magnitude of the bounce. Sometimes it could be a very shallow retracement and then roll over and go lower. This one particularly retraced pretty much to the breakout point here, the break point at 1888, and then stopped. So you can see exactly stopped right there at the ATR. Now, what we want to be looking for with these ATR shifts is now this ATR shift, this yellow line now, is serious major resistance now. This is a trend shift, a bounce, and this is your resistance, dynamic resistance line. So what we simply want to be looking for now is, and this is a bear stacker formation. You can see how the trender bars went from bright green, dark green, yellow, red on the bounce. So this is a clean bear stacker. And now the bear stacker also has with it, okay, a premium signal. All right, now not all of them do, but this one happens to have a premium signal. Okay, so once that premium signal has alerted us, all right, now the question is, where do we take trades from here? Right, again, we know we want to be taking shorts. Okay, so within the context, once that signal is that alert line is there, we can simply, one way is simply draw a line at the base of it, which is the 1885.75 price point. All right, we can look to take shorts on a break, all right, of that low. That's one way. The alternative way is, once that alert is in place and we know we have this ATR line, if there is a bounce, which occurred here, we can look to take, shorts at, establish some initial shorts at some higher levels after that premium line. What gives us the confidence to do that is the fact that we have an ATR shift. All right, so that's simply a way of establishing a position. You can sell, one contract and then look to sell an add-on contract. on the break of that premium bar low at 85.75. But the key is here we have enough energy now that has broken the uptrend, and it is beginning the potential for a new downtrend. So it's now down. There are times where if the energy to the upside is pretty strong, a shift, okay, we don't want to be buying this with a bear shift, but many times, sometimes that will start a more consolidation type trade rather than a full reversal. But in either case, we want to be looking to take that a short trade. Okay, now just simply that's the anatomy as we stepped right through it, and then now the follow through is simply that premium played out. All right, got a nice push down, and the market was very good to us on this particular day, and we got another opportunity for a bounce. All right, offering us another yet premium. Now these are turbo premiums, okay, rather than the normal premiums. Now when we have a bear stacker shift or a bull stacker shift, if there is a premium or discount that occurs, it's usually going to be on a turbo basis, okay, meaning it's a little bit faster line. The setting is 16 rather than 34 on the CCI line, but that also helps identify a good clean premium or discount, but it is very fast, so you have to be in one sense anticipating, all right, on the bounce or on a retracement, that price will stop and then reverse in the direction of the current developing trend move, in this case down. Now again, also using the right side pivot rule, as price is moving up, into that zone. Now again, I did not put the ribbons on here, but let me just put the ribbons on so we can give us a little bit of perspective, because many of you use the fair value ribbons. Okay, so let's add the ribbons on here, and we'll see what they look like. Okay, so by adding on the ribbons, you can actually give some perspective of the average price. So you can see that the average price, the 34, is below the 89, and price pushed up right up into that fair value zone and slightly above it. So according to our premium definition, is price at or above the 89 with the 34 below the 89, and that condition is true, so it gives us a premium. Now the idea is simply using the right side pivot rule is once price is in that zone, okay, the expectation is that price will pivot, okay, it will pivot up here and then start its way to the downside. All right, so what we want to be doing is anticipating that by placing perhaps a sell stop order, okay, slightly below this perhaps prior bar of the low right here, which would be a good spot, and you place a sell stop. And again, you want the market to pull you in when that high bar is complete, because the momentum now has shifted to the downside, so we want to take advantage of the price structure pivot and then enter on a short position there. Okay, and then just as a final continuation here, price, as you can see, continued certainly lower, all right, reaching down to the target zone. In this particular case, was down at the volume trend for the day at the 1877s. Okay, so and then ultimately we got another series of premiums here that worked. Okay, but the anatomy here is primarily looking for the ATR shift on the 750. Now, one other confirming ATR is we can put is the 1500, which is the larger degree trend shift, and we can overlay that. So our initial shift was off the 750. The confirming shift that it was more something more major occurring, it had a potential to trade much lower, was the fact that we got an ATR shift on the 1500 tick time or size basis. Okay, so now for a bull stacker shift, and we'll do that in an upcoming video, essentially the anatomy of it is the reverse from the bear stacker trend shift. Okay, so the best trend shifts occur when we're at a major inflection point. And so the major inflection point here was the breakout target for the session at 1888. Okay, now there is no guarantee that the price is going to reverse all the way back down to the midpoint, but what we want to be on the alert for at those key levels and zones is the potential for a trend shift, all right? And when we get that trend shift, all right, that first pullback, which is this one right here at the 1885.75, that first pullback, all right, is in a sense a mandatory style trade for us, right? The first pullback generally is the safest and generally produces a pretty good reward risk ratio on the trade. Now just bear one last thing in mind, is that there may or may not be a premium or a discount signal that fires on a stacker. It is a conditional trade, okay, and so but the style of entry, looking for the pivot, all right, is no different regardless of whether you have a premium firing in this example here or not. And if you don't, you would still look for a pivot turn and enter using right side pivot rule. Okay, so we'll conclude the video at this point, and this was again the anatomy of a bear stacker shift, trend shift, and I hope it's helped, and we'll see everybody at the next video installment. Good trading, everyone.